welcome to the Money Adjustment. I'm your host, Dr. Marc Kramer, DC. I am a chiropractor who loves investing and trading. Are you interested in what's moving markets and your money? Great. Me too. Let's get started. Hey, what's up, everybody? I'm here with my friend George.
Hello.
Hey, George. And don't worry, this is not a live stream, so I can still edit around any gaffes. But I wanted to make sure that we're recording because I wanted people to see your artwork. This is amazing.
There it is.
Yeah, let me. It's hard to.
It's hard to get on the.
I got to work on the lighting part of it. But do you have anything you want to say about this, George?
It took way too long.
Yeah, that's a fair statement. But it's amazing. It's 3D printed, right?
Yeah.
And you were great because I casually brought it up to you, and you were quick on asking questions and getting a great design for me. So I'm thrilled with it.
Yeah, thank you.
And I can see a business opportunity, as we've discussed before, with regards to the sign, but that's like a separate thing.
That'd be the dream.
Yeah, right.
That'd be the.
This is amazing here. So what we're going to do today, George, I think relative to the podcast, and some of this I'm going to probably wind up editing, but we'll see what makes it, is I would like to do a segment with you called, well, this will be a working title, but TA time.
TA
time, technical analysis time.
Sweet.
Yes. And what we will do during this segment is we will pull up a chart and we will, in fact, before I even go into more detail, let's just pull up a chart because we'll see it by doing. So, I need to find, share my screen. All right. And let me see if what I have open. I have so many things open, George, but I have to scroll through here to make sure that what I have open. Okay, so this is set up. I am logging into my trading view right now. Oh, there's an update available. Okay. All right. I got to relaunch it. So I'll just keep explaining it. We will, so for this working title TA time, we will pull up a chart and we will do some technical analysis on a chart of varying, like whatever we decide to do it on. And I allowed you first pick on this one. And I should say I offered you first pick on this one. And what chart did you choose, George?
I chose GME.
GME, baby. So I am I'm still trying to get into my trading view, actually. Application, grant access, open trading view. All right, here we go. Something's happening. Okay, now we're cooking with fire here. This, I hope, will get better over time, and it won't take so long to actually pull the chart up. And I would like to just have the chart pulled up, actually.
I
will just have the chart pulled up, but because of work and everything, sometimes it's hard to get to everything in a timely manner as I would like. All right, so now I'm going to pull up GME, and then once I have this all set up on my end, I'm going to share the screen. And here we go, GameStop. And let me see if it'll share with you. Now I gotta get back here. All right. Yes, share. I'm hoping.
There we go.
You see it?
Yep.
All right, but now it's just saying grant. It's showing that part. It's showing that thing.
Yeah.
So I'm gonna close that because that's not what I want to share with you. Let me see if it'll actually show you the because I already opened it up, so that was just the old thing, old screen, share screen, and drum roll, please. Come on. My gosh, George, I don't know why it's not showing. Oh, wait, here we go. Window. No. It's not.
Can't you just trying to share the? Are you on like the web version or are you on the app?
I am on the app, but I might need to do the web version. Although you would think
Yeah, I thought
that I could
that
just share. It's on my desktop. Like I should just be able to share. One
is
would imagine.
is there an option to just fully share your screen?
There might be. Let me see. There might be. I'm just hitting screen, and it does let me. It will do a full share. So I have to be careful because I have other things open on here
Yeah.
that are sensitive. So if I do it this way, and then I pull this up, and I can just go back and forth. I think this could work, George. I'm feeling confident, man.
Yeah, this
So
works.
share entire screen, and then we're gonna get like some weird stuff, I think.
You can edit it too, right?
All right, so it's interesting. It'll share that part, which is not what I want to share with you. And
I can
then like
see.
trading view completely. There it is. Can you see this?
I see Apple. I think that's Apple Music.
Oh, I see what's going on. It's sharing my other screen. Ridiculous.
Oh, okay.
All right, so I can fix this. This I can fix because I can just move this. And actually, that might work better. Although I would have liked it in front of me. Oh, it's kind of still in front of me.
Yeah.
All right. So now you
There
can
it
see.
is.
So you can see GME. Okay. So here's GME. I don't know if I did this right or not. I have some lines on here. I was trying to play around and figure out how to do anchored VWAP, which was like that technical analysis tool I was telling you about. I don't see. That's not what I want. Crypto pairs screener. Wow, they got everything here. I got to play around with.
They do. Yeah.
I have to play around with TradingView more.
I think if at the top right next to unnamed. Yeah, right. Yeah.
I'm just trying to close this little part down
here. It's right there. It's to the right next to the price. To the left. Yeah, that's it.
Boom. All right. You're so helpful even from afar, George. I appreciate you, man.
Of course.
All right, George. So what I said with you. Okay, so I'll let you go before we really get into it. I'm going to zoom out. So we're like, I want all of GME because that tells a story.
Yeah.
I don't think you're going to see a lot of stock charts that look like this.
Yeah.
GME is going to be a very iconic stock for various different reasons. So why are you interested in GME? Let's start there.
So exactly what you said. It doesn't look like other stocks.
Okay.
Besides those like some weird medical company stocks that like went crazy. That doesn't look like Apple or Amazon or Google it just looks crazy.
All right. So you like it because it's exciting. It almost looks like a crypto stock.
Yeah,
a crypto coin, or
exactly.
It looks like a crypto chart, not a stock chart.
Yeah.
Okay. So did you get? I sent you a link this morning. There was something someone posted on X. I don't know if you got that link or not, but it was kind of funny. I'm going to see if I could just share it because I want to give context to what we're doing here because we're going to do the technical analysis, but I also want it to be like technicals related to fundamentals too, because that's where people get hung up is we get excited about technicals. I like technicals. I trade off technicals, but if the fundamentals are doing something else, it's not right for everybody. Like I don't like the fundamentals on this. If you're fundamentally oriented, you cannot trade this stock.
Exactly.
So, okay. So I'll see if I can even just show this on the screen. No. That's good. Like I said, all these little delays and things I'll edit out unless it's funny.
Yeah.
And again, just for context here. So
I
replied to somebody today. I guess I'll have to find it that way because I pulled it up and then it didn't show me what I wanted. I'm going to try that one more time here. Okay, here we go. Okay. I don't know if you can see this. You've probably seen this meme. This is like a really popular meme right now. Do it with my phone.
Oh, I didn't get that one. I got the...
You got my reply to this.
Yeah.
I replied to it, but this is the meme. So I don't know if you can read it on your end.
Yeah, I see it.
Yeah. So it's Wall Street Bets, which is also appropriate because they're like big players in this whole saga.
Yeah.
And is that showing up backwards to you like I'm seeing it? Or are you
No,
actually
it's
seeing
good.
it right-sided? Okay. Like it's like I'm getting a reverse image on my end. So
GME buyers.
yeah, so like this is like it's the joke. Like the buyers are not getting tired.
Exactly.
So GME, it's trading. It's a very popular stock. People who are traditional investors and financial advisors. Hate is a strong word, but I would say they
stay away
they
from
would
it.
never advise their clients to go anywhere near this stock, which, you know, again, makes it interesting. And I still think we can do some technical analysis on it. So this is trading on other things besides technical analysis. So one other quick thing that I did is I did some strategy with Meta AI. They use the Llama 3 for their AI program, or their AI software, or what would you call it? Their AI bot. Hello, this is AI Marc. Was searching for is large language model, LLM. So, and I did it on GME because I just wanted to see some things here. So, GameStop GME was founded in 1994. And it's in public for almost 8 years.
Yeah.
So it was a privately traded company for 8 years. It wasn't traded. It was a private company for 8 years. So basically what that means is venture capitalists were investing in this early on. So before
privately.
Yes. So before we actually get to see anything on a chart like this, before we even can do any technical analysis, it has to be a publicly traded company. So, for example, recently, Elon Musk took Twitter off of the public exchange. I probably traded on NASDAQ, and then made it private again to add and change the name to X, and that's its own story. But stocks or companies will be traded publicly and privately. I'm just giving a little backstory because I don't know what type of audience we're going to attract, and because you're younger, I'm assuming we're going to attract a younger audience and have some people that are like, I'm just talking as if they knew nothing almost, other than having interest, right?
Yeah, like that's something I would watch because I'm still not. I do not know a lot. I'll say that.
Yeah, but you know enough that I feel good about having conversation with you because you're excited. You want to talk about it. There are people that would care. They don't even like. I would throw this. The fact that I'm even looking at a chart right now, I probably lost viewers. Like if I do other stuff and other segments, and maybe I throw up a chart and they're like, ah. But I think a lot of people are kind of into technical analysis these days. So, but people who are interested in the stock market are interested in watching charts or crypto or Forex or futures.
I'm going to be honest. I think that because you're looking at a chart, I think it's going to be the opposite. I think you're going to get more viewers because you're looking at a chart. At least that's what I've seen.
Yeah. Well, this is good. It's all going to be new. So if I get any that one viewer that's watching right now, thank you so much. We're gonna get going on this technical analysis here. So, I'm going to do another segment. Again, last quick thing, and then we're going to dive into it. I'm going to do another segment on candlesticks and going through what technical analysis is and providing like a foundation for what we're about to do here. But here we're going to talk about, let's talk about it. Resistance and support, right? So George, like what is the primary tool that you use for technical analysis?
Exactly. Just resistance and support.
Okay. So
that's
like
my 80%.
Right. So, and this one's great. Pardon me if I'm like, you're going to get my side view here because I actually, for getting it on the screen, put it on my other screen. So the first thing, I'm sure you could see it. Have you done any technical analysis on GME specifically yourself?
Not really.
Okay.
No, especially not in the long term, because what I do is I do that short term. at intraday technical analysis, like what it hit today.
Right.
You're
You're looking at a shorter time frame. So again, even before I start drawing in the lines, so look at time frames. So if we go on a daily, like you're talking about, that's actually a little bit more reasonable on a daily. Like a daily
I actually
chart.
look at the minute.
Okay, so yeah, we can really get into the weeds, and maybe we will. But again, for context, I'm gonna zoom out because this is a good for people who are looking for practical advice. The longer the time frame, the stronger the technicals. Meaning,
exactly.
Yes, meaning the further you go out, what we find further out is more likely to hold and have support. Like, let's just do it. So if we go out 5 years, I mean, we went out the whole way and you can see it almost did nothing. Well, I shouldn't say it did nothing. So a couple interesting time periods. Something happened around April of 2005. That's when it really went into this long bull run. And maybe even before that, there's something kind of interesting. It took a dive in December of 2002. So like there was some kind of capitulation that happened here. You see how like there's that big red candle, this one right here? Something capitulating happened here.
And then it just recovered.
Yeah. So what's relevant about that is that it's usually after these big moves like that a stock will resume a trend, assuming there's still some kind of fundamentals in place. Like I said, I haven't done the research this far back, so I don't know. It's kind of cool how I pulled it up here. It actually gives you a better view. So you see there was this capitulating moment because it's a long red candlestick here. So like people just like flooded out of here, or algorithms broke down, or not broke down. They did what they were supposed to do, which is stop lossing all the way through. And we see a little bit of volume. So that was like high volume, big red candlestick. This is suggestive of capitulation. Now, whoever was trading it around this time, for whatever reason, probably was like after that kind of move, may have even just given up on the stock completely, because this, although we can see the uptrend resumed, if you're actually in this moment and this kind of thing happens and you're just seeing this without seeing like what happens after that, I might think that it could go down another leg. So you never know.
But it never continued.
You never know. Technical. So people go, oh, I don't really buy into technical analysis because you can't predict whether a stock's going to go up or not. And that is true. The value add of technical analysis, and the same thing could be said about fundamental analysis, is that you can't, if anything gave you 100% success rate, you would just do it and we wouldn't even be having a conversation. It would just be, I'm going to go all in and it'll go up. But the reality is we use these tools to help give us probability of, okay, what is the probability of the stock moving in the direction I want it to?
Right. I mean, it kind of gives you an edge, right?
For sure.
Instead of just free trading.
For sure. Fundamental analysis or technical analysis, and if they're both congruent, like if they're both, if the fundamentals are good and the technicals are good, then you're really cooking with fire. Because then you have somewhat of a term, not somewhat of a term, but are you familiar with confluence? The term confluence.
Confluence?
Yes.
I don't think so.
Okay. So confluence means more than one indicator is telling you something. So if I'm using it slightly out of context, because there's confluence just for technical analysis. So like if we did support resistance and maybe used volume, and then MACD is a popular one, or VWAP, volume weighted average price. These are, if you're new to this, you can just hear the term. You don't have to totally know what it is, but it's at least you've been introduced to it through sound. And then when it comes up, or when you start thinking about it, or if you hear about it again, it'll be like, oh, okay, yeah, I kind of remember talking about that. But if you have multiple indicators that are pointing in the same direction, that's confluence.
Or like it's a more reliable kind of indication.
Exactly. Yes, it just gives you, it increases your confidence. It should, like,
Yeah.
it'll, for someone who's trading, it'll allow them to feel more confident with what they think is going to happen next. Okay. All right. Because we want to get to today here, because it's like, I want to trade this tomorrow. I don't care about what happened in 2002 and what happened with this company. So let's get to more recent history. Which I think even in the past 5 years is recent enough. So this is a 5-year chart of what's happened to GME in 5 years. And we're starting about this 2020 period at the time of the global pandemic. And if you see from that point forward, was it March of 2020 was the bottom. So this is July 2020. So the GME phase kicked in. Very obviously kicked in, right? Obviously kicked in. So right here on January 21st, am I looking at this right? Or no, January 11th of 2021. So like, if I was just looking at the chart, I would, from a fundamentals perspective, this is not a great chart for fundamentals. But if I wanted to look at the fundamentals relative to what I was seeing technically, I would say something big happened here because there was a lot of volume in October. So something happened here in October that got people excited, maybe even going back to August, because you can kind of see there was like not a lot of action, maybe a little something going on here in 2019, then not a lot of action. Then all of a sudden, boom. It's like, what happened?
That's
all
crazy.
Of a sudden, everybody, all of a sudden, GME is like, everybody. I remember this when this was happening. I didn't follow GME. I wasn't trading GME.
I didn't,
I was just watching CNBC, and I'd see like Jim Kramer was having back surgery, and he got on the phone and he's like, people, stop trading the stock. Something really bad is happening here. You're going to get hurt. And then the movie Dumb Money really kind of does a nice job. There's actually Dumb Money and another, I think it's called GME, something with the saga of GME. But so there's a documentary about it, but it's a pretty well chronicled story. And the interesting thing about it is it seemed like a period in time that may have been done with. Like, they made the movie, Keith Gill got his money, and end of story. Everybody who lost. I forget the
just started fading
manager. What's that?
And then it just started fading off.
Right. It could,
after that, if you look at it.
So once that big story, so like whatever happened between January and February, I mean, this is a nightmare. I think maybe even when it peaked out here was probably when Robinhood got involved. Robinhood here, this is one of the, I remember at the time, Robinhood became the poster child for doing what they did, which was basically stopping the buy side from GME. Really? So they wouldn't let people buy it, but they would let anybody sell it, which is like, oh my God, if all you're allowing for is the sales, of course it's going to crush the stock. So that pissed a lot of people off.
I think I remember that.
Yeah, but the reality is, because I actually was watching it around that time, TD Ameritrade, which was recently bought out by Charles Schwab, so that's like a different story. But they weren't allowing you to trade it. So other platforms were doing the same thing Robinhood was, but Robinhood became the poster child because it was the newer one and associated with the gamification of the stock market, and so there was a little story behind what happened here. Right. So we can see something that happened on the chart. I kind of went into the story behind it. There's, like I said, there's movies made about it. Like, you can watch the movies. Something again. So from the 1st of February 2021 to about the 16th, there was a couple weeks. This is actually just representing a couple weeks, right? So a couple weeks, it went from what are we looking at here? I don't know. Is the stock split adjusted? Because the numbers don't look right to me. I remember that stock got up to like 400 something. So they must have split it or something.
I still don't understand why they don't allow, why they stopped the stock. Like, I've seen it just recently during that pump. They paused the stock like 17 times.
Why they halted it.
That's it.
Yeah, they'll do a halt, and I have to this is where stuff like B-roll will be good, because I know there's a definition for halt. It's something like they'll halt for 10 or 15 minutes if they see unusual activity, like stock is just trading abnormally, either like abnormal volume or abnormal price, and then they'll halt it for 15 minutes. And the reason that they halt it is so that investors can wrap their mind around what's happening. So investors and traders have a minute to think about, okay, what's happening here. So they incorporated this halt system, and I think I would have to kind of review and do my research on this in terms of it was a recently added rule, the halt rule, maybe within the past 5 or 10 years. So I mean, it depends what you call recent, but relative to the stock market, the halt rule is like a newer thing.
Yeah, it is.
Yeah. So if I'm saying anything that's incorrect, or people want to call me out if I do this, please do so. I'd love any kind of engagement whatsoever. And I might, like I said, maybe I'll B-roll some stuff in here where it's like you can put up a definition of, okay, this is the halt rule and what happens. All right. So now here's kind of an interesting pattern on the where are we at? We're still on the 5-year chart. That's the 5-year. Let's just do the yearly and see. Okay, so here's kind of an interesting pattern on the yearly. So if I was looking for, first off, I'm going to go back for one reason. If I was looking for support, like the support resistance that we talked about earlier, I would argue, and you can kind of see in the chart, and I'm going to put a line.
I was going to say that too.
Yeah, you can see it, right? It's if you looked at these enough, it's pretty clear to people who actually look at charts. But if you haven't, we have a high here. We have not a higher high. So that's interesting, right? We have a high here, and people who are watching that longer term frame didn't go all the way up because we have a lower high. So that suggested that the stock was going down, and it did. And so,
I bet a lot of people in 2014 were wanting that to break so bad.
For sure.
But it never did.
2014. For sure. Yeah, you're riding this, and you're going like, oh, we're about to go to the moon, as they say. All right, so let's put some lines in here. This was the high. This was the high before all the nonsense. Right, so boom, that's a support line, and it's a support line only because we're past that now. If we were under that line, it would be a line of resistance. So when people think support resistance, I might even throw another line in here just to illustrate the point. I think this will still work. All right, let's see, trend line right here. Yep. So we got support resistance, right? You agree with that pretty much? Like those levels, you can probably go down. There's probably a range. You could go, like, if you want to do 1 year or 2, there'd be a range. Like but
those are the most probably those are probably the most sustained ones, I think. Yeah.
Right. Another term outside of just support and resistance is supply zone, right? Supply and demand. So people who are down into this area, then there's probably going to be some demand, because people who are watching it to trade it will see like, oh man, we're getting to these lower levels. So when I'm watching charts that I'm trading, if I see it go into an area of support, then my internal demand for wanting to trade it goes up. Does that make sense? So like the psychology behind this is that if we're getting to a level that it's low level, even here you could see it play out. They fell into a level of support, and the demand went up, which made the buyers come out. And so the buyers brought up the price, right? But then, and in fact, it almost plays out perfectly, because you can see there's something going on here. This is an area of consolidation where it just goes sideways for a little while. So there's kind of a line here, and you can see, actually, I'm going to put that line in. I should make it a different color so we can show.
That's like 5 years.
Yeah. So like, and the reason that I'm on the longer time frame is because when you're trading it today, if you have these longer time frames on here, it'll give you a little bit of an edge in terms of people that are not watching what happened back here. So when you could see people were definitely watching this area, right? Because it popped. So let's come back to the present time. So we're now on the yearly chart. So it's just showing, it's the year chart, which is showing you the days over the past year. So it's like a daily. So we have, looks like there's like, if in the more immediate, would you say this area might be another support resistance level? So let's throw another one in
I was going to say.
Let's throw another one in here. And here's something interesting about this one too. Once I get it in, you'll probably see it, is that's arguably about equidistant, meaning this area of support or resistance is about half. This area here is about halfway. You see that? I can move it a little.
I still have questions about that because
go ahead.
Whenever I mark my support and resistances, and I look back maybe about like a month, because most of the time I still leave them on there because they'll come back to them. What I've noticed is it's always in between two of them. It's like equal distance in between them, and I don't know if that's intentional or if that's
there's psychology behind it. It's intentional is an interesting word to use because intentional implies that there's some conscious thinking going on. So in that respect, it is intentional, but it's also psychological. Is the reason for the reason for the intention is psychological. So people are active traders and are trading off of technical analysis because most active traders are shorter duration traders. That's what trading is. Right. It's shorter duration versus investing, which is long duration.
Exactly. Yeah.
Go ahead.
Oh no! I was agreeing. Like, yeah, that's it.
Yeah. Go ahead. Yeah, I want you to contribute. I talk fast, so I don't always want to talk over you. I definitely want to get your take.
So, because there's a lot of like trading, like ways to trade, scalping and
right.
And
scalping,
I'm trying to think.
Scalping, day trading, swing trading are the three broad categories. Right. So scalping is like you say you're trading the minutes. You're a scalper, I think.
Yeah.
I think probably, I am. Yeah, I would love to see in the comments below, especially from the younger traders, if you're a scalper, or from any trader, if you're a scalper, swing trader, or day trader, if you classify yourself as all of those, or if you don't care, you'll trade them all, or if you're just a long-term investor too. But this is, I think when you're talking technical analysis, you're attracting traders. So if you're any of those, comment below. We want to hear from you, man. I want to create a community around this.
Right? Yeah, we're like in two different worlds.
Right. Two different worlds. What do you mean we're in two different worlds?
Like I'll hold a trade for like 3 minutes and you'll hold the trade for 3 years.
Exactly. Yeah. I'm definitely more of a swing trader. Swing trader has its pros and cons. One of the advantages to swing trading, why I like it, is because like we said earlier, if you look at a longer time frame, it's a stronger technical signal. The shorter the time frame, it's riskier because the shorter the time frame is not as strong. Yeah. Like you can see things playing out, but if something's happening on a longer time frame, it's going to influence what's happening on the shorter time frame. Kind of trying to bring it all together. That's why you want to look out broader and then narrow in, but keep a few big lines. Like we have our big lines down here. And if we have those in mind, then we know once we're in this area, we have to do some serious soul searching if we're trading it. You know what I'm saying?
Yeah.
All right. Yeah. So one thing you said, and I don't know if I answered it or not, because I said there's a psychology to why you're like, oh, I notice it kind of goes in half. Like something happens and then it'll go about halfway, right?
Yeah, exactly.
So like that's a good observation, because if you're trading, you might even think that too. Like active traders will look at that and go, okay, if I don't have a support resistance line per se, I'm going to take a risk up to maybe about halfway as my next spot of possibility of action, because there will be the halfway movements is usually like a bounce. Those are like people that are trading the bounce. So if a stock gets slammed, then people go, oh, it's so narrow, it's not going to get slammed anymore. Then they'll trade the bounce, but they still don't have, maybe it's fundamentally still not good. So they're like, I don't want to be in the stock. I just want to trade the bounce. So it'll bounce about halfway and then it'll fall back. More often than not, the one I'm showing you right here didn't. It actually gapped up. It gapped. There's the gap. If anyone's heard the term.
Yeah, those retractions.
Yeah. So it's like, so it must have closed at this high, and then the next day it just opened up right here. So there's reasons for the gapping. Positions close after hours, and a lot of options trading happen. Like a lot of options are settled after hours. So if they're like big option contracts, or that's one variable. I know like there's the dark pools and all kinds of other things that happen. And the institutional players, that's where this kind of activity happens, where all of a sudden overnight something big happened and it just pushed the stock price right up.
What were those? The dark pools?
Yeah, dark pool is, I'm trying to think of an interesting way to explain this. One of the cool things, this is divergent, and I hope it doesn't, for people who aren't technical or not trading actively, because my analogy that I want to use is Bitcoin. So Bitcoin doesn't have dark pools per se. It has other things that people speculate, manipulate the market. But dark pools are when activity is happening outside of what you can see. And I think one of the reasons my mind went to Bitcoin is because there's on-chain for Bitcoin, right? I'm not a crypto expert by any stretch of the imagination. I just have some general understanding. But the on-chain information is one of the draws for the crypto community, is that you can see an address wallet, you can see what's traded, you can see what's exchanged visibly to public. It's all public information. So the stock market is mostly like that. What we're seeing is a lot of public activity, but things happen that don't show up on the public side, that are in the dark pools, as they say. And again, this is a very layman definition of this. So the active traders are people who are like, want to just chew into everything that I'm saying and be like, this guy, let me set him straight. Do it. Like, put it in the comments. I'm giving you a broad overview here as a retail trader. And I'm not even in finance. This is just like, this is my hobby, but I like it and I am excited about it. And I do think I have some insight into it. So is that helpful with regards to the dark pool? Like,
you know what?
Some idea of what it means. It's just basically dark. Like, you're not seeing, you might have heard of something called level 2 trading, where you get information in terms of sellers and buyers. So you know exactly how many sellers and buyers there are. So dark pool would be information that doesn't even show up on there. So it's like, it's stuff that's happening that's not publicly visible, is the simplest way I can say it. And again, if I'm butchering this,
like, it's still legal?
Someone to comment. What's that?
And it's still legal?
Yeah, again, it's going to be one of those things I would have to look. That's kind of like if you wanted to do like a homework assignment or Google it. I mean, I could Google it right now. Let's just do it, man. All right. I'm not even going to Google it. I'm just going to say to like my meta here. Can I do this? Yeah. What is a dark pool? All right, here we go. The dark pool is a private exchange or platform where traders can anonymously buy and sell securities, derivatives, and other financial assets without publicly disclosing their identities or the details of their trades. Right? So it's kind of...
Really?
Yes. So in
terms
of
I had no clue it even existed.
What's that? Right. They're dark. You're not supposed to know it exists. It could even be just for institutional side. It's not all manipulative in the sense that it's not just, the big guys are trying to squeeze out the little guys. Imagine if you just knew when a Warren Buffett made his trades. And people do, but they get disclosures like he'll have to disclose, Berkshire Hathaway will have to disclose what they invested in quarterly. So they'll do like a quarterly, we did this last quarter. So the information that the public gets is like, Warren Buffett or Berkshire Hathaway just bought $1 billion worth of Occidental. And that becomes public knowledge, but they might have, and a lot of times they'd already bought it. They bought it last quarter. You don't even know if they sold it already. You guess they probably wouldn't because their buy and hold is their strategy. So if they sold it after they had already made that announcement, that would be unusual. But you're not always guaranteed to, I guess the reason I was bringing it up is there are reasons to have things just not always publicly available, because if all of that information became public knowledge, then it would affect the market in a different way, right? So it's more for some of it is more for safety. It sounds, the name is ominous, dark pool, it doesn't sound right, but it's not all like nefarious bad behavior. But some of it is for sure. Some of it has to be.
You know what?
Speaking
of that, could you pull up a NVIDIA chart?
Yeah, you want to, we didn't even get through the full GME. I'm going to say one comment on GME and then we'll get to NVIDIA. Okay. One other thing that I haven't put any kind of trend line in here other than support resistance, but it's so obvious to me something, and it's probably obvious to you too. There's something happening right here. So there's like this diagonal support happening. And and when I put the line in, it's like, I can manipulate it a little bit, but it's pretty clear like this something is, there's touch points, something happens here, there's buyers. We touched again, buyers, right? So, and then another interesting thing, and then I'll pull up NVIDIA, is we have one this was the high going down here. So there's almost some type of flag formation going on. Right?
Yeah, you're right.
So if you were just trading this on technicals and you're seeing this kind of action happen, it might be bullish for the stock. And I'm not saying go buy GME, but I'm saying if I knew nothing else but what I'm just seeing on the screen, I would say, if someone goes, would you be a buyer here? I would say yes.
Right. Yeah, I would too.
Yeah. So let's pull up NVIDIA.
Yeah, like just for a second, because I wanted to see if you see it too.
Okay.
Because
I see today. I don't know this today. Yeah, June 20th. Wow, what happened? Oh wow, that was 3% down today.
Yeah.
It's all relative. It's like, the stock is cratering. Yeah, look where it's coming from, man. You could have bought NVIDIA, just to throw salt in the wound. You could have bought NVIDIA for, why is it saying 14? Oh, it's split adjusted. You could have bought it for $14, although the shares at that time, I think, were closer to 150, 160. I think the last bottom was around 160. But you could have bought it in not even like a year ago, a little over a year ago for well, let's just use the split adjusted. You could have bought it for $14, and now it's that's a 10x. Because it got up to 140. That's a 10x in 1 year. Boom, 10x.
Jeez.
Right? Okay, so now you're like asking if I see it too. So there's a lot of things going on with NVIDIA. Oh my gosh. Like, I don't trade this one. I'm actually long in NVIDIA, and I've just been trimming. It's still a decent sized position, but I don't have any of the original money that I put into it. It's all house money and then some on my NVIDIA. So I just leave it alone. Like, I don't have a reason to sell it. I'm a little anxious about it because this is really high. Like, this kind of,
I think
it'll go up forever.
I think it's too high, if I'm going to be honest.
Yeah, I think they were just talking about this on Halftime Report today. So I'm going to just do what I see, and you can tell me, that's what I was talking about. So here's something interesting is happening here. So something interesting happened in this time frame, because this is kind of like a very clear, it's going up. There's a little pullback there. I mean, you could put another line there. You want to be careful with how many lines you're putting in, because you could just line it up. right? Especially if you go into the minutes, all you're going to see is lines. That's why it's hard.
Yeah.
Because if you're doing it on the minutes, all you're going to see is lines because each minute has its own pattern like this.
Yeah, that's what I do.
Right? So, which is fine as long as you know these are the bigger ones. So if you're looking for risk reward, if you say, oh, if I'm a buyer here and I know my stop, like I don't want to lose more than this much, I would accept taking this much of a loss. Or if you just got in here and go, I would take a loss if it turns in the other direction, even whatever amount it is, then that's a pretty good risk reward because it's a big red. It's a big red on volume. We're hitting. I don't know if you would have known this is support if I didn't just put that line in there. That's the part that I don't know. Just honestly, real quick,
because if you zoom in on that big,
what's that?
What was it?
No,
if you zoom in that big red candle, I think the bottom.
This one
at the top. Not the top one, at the support.
Okay, this one.
I think the bottom of the wick matches up with the top of that previous movement before that gap up.
Yes, good observation. Absolutely. So there is something like right here, right? Yeah, look at that for sure. And you pan out and it's like, oh yeah, that's how it is. Here's the interesting thing too, is like once NVIDIA broke this line here, oh my God, it's insane. There's not a lot of charts like this. Like NVIDIA was a once in a lifetime thing. I mean, when you hear that term a lot, but really this kind of thing just doesn't happen in a stock. Maybe in the crypto community, it's not once in a lifetime, but for a stock. So this was NVIDIA's all-time high was in November of 21, previous all-time high. And then this is not even really a consolidation. I mean, this would have been more like a falling knife, which is why it would have been very hard to buy anywhere along here. And I remember that there was a bear market from 21 to about October 22. Things bottomed out, but the recent bottom was in October of 23. Now like the years are just stacking on top of each other. It might have been the October 2022 might have been the low across the board, not just NVIDIA, but just the overall stock market. So so we go zoom into more recent times. What's happening here? Broke out from this level, which is $97, $100. Because here's like another quick tip. Every gap up, you get into a period of exhaustion, meaning like a stock can only gap up so many times before buyers get exhausted. Because people like around here were like, oh my God, NVIDIA just did this move. There's no way it's going higher.
Yeah.
Right? There's no, like, I looked at this. I probably trimmed. I was probably one of the people in here. I was trimming at this level because I'm like, are you kidding me? Look at that move. It's not going higher.
It makes sense.
Yeah, I held some of my position because I'm like, it could go higher, and it did. It went a lot higher. Like it's unbelievable, actually. Now that I'm looking, because look at how much higher it went. Like it already went high, and this high is larger than that move.
That is insane.
You know, all these little levels in between. These are these lines that you can't really see. I mean, you see them. It's on a grid. Do you know what those are?
Are those? No, actually, no, I don't.
All right, so those are standard deviations. So if you don't have support resistance, some people will just use standard deviation. And in this case, you can see it kind of worked. Standard deviation is the probability of a stock moving a certain distance based on its past history. Does that make sense? So it's like this stock kind of moves like this. NVIDIA has always been a more volatile stock. It's a beta name, which just means higher volatility. And so here it broke out, and in order to gauge the breakout, you could see a little selling started to happen right here. In fact, there's the indecision. This is an indecision candlestick right here, where it's like buyers came in and sellers came in, and it kind of landed in the middle, which was indecisive. They're called doji bars, where they're not like
bar. I've never heard of this.
Yes. So these are interesting because it just tells you there's indecision happening in the market. And it's indecision. You can see it's happening around the standard deviation. It's like, okay, we're breaking out. We're hitting its standard move. It usually moves this much and then changes because that's the volatility. So people here got a little nervous, reasonably so. But then it clearly broke out from that. And then we went up to the next standard deviation. Look at this. Look at it in terms of the lines. Again, line, standard deviation, boom, broke out again. Then it kind of like that became the new support. And so it broke out, hit this part, broke out from this level, and then coming back in, that became the support. And that's where people came back in. And so it broke out, back down towards support, broke out, hit resistance again. So that's 2 times hitting resistance, which is scary. And I think that's what even here, it's like, oh, it's coming back in. It could fall all the way back again, falling right back into support.
Yeah, that reversal is crazy.
Yes. And that was the really scary side. I think I sold a little bit here too, because I'm like, all right, this is, I got here. I'm going to just kind of, I have to keep my position. That's why it's important to be mindful of your position sizing when you're talking about overall portfolio management. So that'll be a separate thing. Technical analysis is one thing for traders, and portfolio management is another thing. And in fact, if I was going to say which skill set is going to make you wealthy in the long term, it's portfolio management, not technical analysis or trading.
Really?
Yes. Because trading 9.9 times out of 10, you will lose all you've made. You will have 10 streaks of win. Think you're a stock market god or a trading god. And then you will take a bigger risk like I did recently, and you will lose more than you made in your last however many trades. And that's a common story. I hear it. I'm still living the dream of that. It sucks. But my long-term portfolios, my portfolio management, like I'm in NVIDIA, I'm in Microsoft. No, actually, I'm not in Microsoft. I'm in Apple, I'm in Facebook, and I bought them in the lows. Like I bought dips. I've been in and out of those a little. I trade around core positions, but those have been great. They've been great. They run well. They've been good long-term. Those portfolios are holding up very nicely. So that's money I don't lose when I manage my portfolio well.
So at the end, though, it's just all back down to the basics.
In
the
what?
Core basics of it, like scaling out of trades, and as like for example, as you're like on a winning streak, just it's that one position where you go heavier and heavier, and that's when you lose, right? So just scale down your position sizing so you can't lose.
I went on. I'll do maybe a video on this for like the loss video, but I told you about it, Unity. I realized that loss too, because Unity broke through resistance. Like it was trading at its lowest levels a couple weeks ago. And I bought, not a couple weeks ago, a couple weeks ago, it had bounced off this one level around $22 multiple times. Like we'll do maybe a Unity chart at one point, but it bounced off this level. And I thought for sure there's no way it's going to go lower than this. And I had fundamentals too, because Apple was doing their deal with the Vision Pro, which now is hilarious because the Vision Pro is being halted, and the Unity was a big part of that. And that stock is just getting worse and worse. So then now I'm like, oh my God, it could go down to $12. I bought it I bought it 27, and my position sizing was ridiculous, which is why I lost a lot of money. That's the game. I lost a lot of money, but I didn't lose money I couldn't afford to lose, which is why I'm not like crying and I'm still excited about the market, right?
Yeah. So again, that's like another basic point, right?
Yeah.
Like it's don't lose money you can't afford to lose, and it's just all, I think, comes down to the fundamentals.
Yeah.
And that's it. And I think
I
think the biggest thing why I mean I'll admit I do still lose. And like I'll win. I'm still equal on that win and loss.
Mm-hmm.
And I think what happens is I'm seeing this, and it goes back to the fundamentals. I think is just how well you can follow them over a long period of time. Like if you can constantly not break your own rules, and I think
That's
there's like
right.
situations where like, oh, it's breaking that, and you want to break your own rules by buying in higher than you. Yeah,
You nailed it. It's discipline. You have to have a discipline.
I
And
think
this, I
so.
lost a lot of my, this is what I told my best friend this too, because he's the one who got me into the market, and he's still like, we still talk pretty regularly on a daily basis about like what we're trading and what's going on. And I told him that my biggest regret, like this literally would have saved me hundreds of thousands of dollars, no exaggeration, is honoring your stop losses. Honor your stop losses. You have to be willing to take a loss. What happens is, and I'm still victim to it. I did this like recently. I watched support levels get broken, and I just justified it because I'm thinking, oh my God, this
Yeah.
has to be the bottom.
Yep.
This has to be the bottom. I know anyone that's trading crypto can relate to this. This has to be the bottom. This has to be the bottom. This has to be the bottom. And you're buying that falling knife. Instead of like, once I saw Unity, the next line of support that I saw based on standard deviations is $12. So I'm like, you're going to take another $4 hit on this already huge loss, which would have been, again, tens of thousands of dollars, or are you going to cut your losses and keep your balls intact and live to fight another day? So I had to make the hard choice of like, I could be at the lowest level, but I should have gotten out at $22 because that was the low. That was the all-time low. I should have gotten out at $22, but I'm like, it hit the all-time low. There's no way it's going lower. $18. Oh, this has got to be it. It's a standard deviation down. There's no way it's going lower. $16. Today it was in the $15. I haven't looked at it after that, but like, I don't know where it's trading at exactly right now. Let's just take a look since I did this whole Unity thing. Before I do that, do you think we got to what you wanted on NVIDIA, or did you want me to look at something else?
Another thing real quick that I should add, what I was thinking is, could AMD be lagging? Because, I mean, they're direct competitors.
Yes.
So,
yes. That could be that. Honestly, we'll do another one. We can do AMD.
Okay.
Like another one. You're on the right track in terms of like a cousin. Like they're both semiconductors. They're in the semiconductor space. AMD could be a competitor. AMD, if you're thinking about it just in price, then it's like, oh, AMD is cheaper. Well, it was until NVIDIA stock split. So like people who just look at price will say, oh, NVIDIA is $1,000, but AMD is only $100. So I'm going to buy AMD. But that's an erroneous way to think about stocks. It's kind of like people buy penny stocks. So they're like, oh, I could buy more penny stocks. You have in terms of assessing the actual value of what you're paying for, you want to know what the stock is valued relative to the company's market value. This was a lesson my friend taught me years ago because he bought Amazon when it was like $1,000 way back in the day. And I was like, how the hell do you buy $1,000 stock? It makes no sense because you can only buy one or two. You know, at this time we were trading less money. I'm like, I can't buy 100 shares of Amazon at $1,000. That's $100,000 right off the bat.
Okay.
And he's like, no, but think about the market cap of Amazon and what its potential market cap could be. So $1,000 stock could actually be cheaper than $100 stock if the 100, like for example, GME is a very, very, very expensive stock based on fundamentals because the company isn't valued at what the number of shares are, and it recently issued more shares, which dilutes the pool. Right. So it's like, if a stock, I'm going to see if I can simplify this for you and for me. If a company's total value is like 100 shares of the stock and each stock is $10, and then so the company's valuation is 10 times 100, $1,000. These are very small numbers, but it's just helpful in smaller numbers to kind of get the point. So then the company's valuation is $1,000. If the stock splits, and now there's not splits. Split is different. If the stock splits, then nothing changes in terms of valuation. If it splits, then you have 200 shares at $5. So it's still the same valuation. But if they add another 100 shares, right? If they add another 100 shares, then there's 200 shares trading for double the valuation. Because if it's still trading at $10 and they throw out another 200 share or another 100 shares, and now it's trading at $2,000 or a $2,000 valuation, but the share price is still only $10. And you think, well, the valuation went up. The valuation went up because they issued more stock. They diluted it. So the company's still probably only worth $1,000, but they doubled what the position is out there, like the number of shares that are out there. So it on the surface now looks like it's a more valuable company, when in reality, because value is determined on revenue, how much money is the company actually making? And GME, as far as I know, is not making money. So if they double it up and now you're paying twice as much, the reason NVIDIA looks the way it does and it hasn't blown up yet is because this stock is actually, in some of these moves, got cheaper because they were actually creating more revenue. The company actually made more money. Right. So you could still have, the stock could go up in price and actually be cheaper. These are not easy concepts to understand. And if you're hearing them for the first time, it's like a mind warp. But these are the things, if you're going to play the stock market game for the long term and you want to build wealth over a longer period of time, then these are the kinds of things you want to start thinking about when you're investing in companies in terms of what you're willing to pay for a stock.
I was insanely confused on that too. I'm going to be honest.
Yes.
This is more of like a learning stream for me.
I know. And I'm glad you said that. So like everybody else was like, oh, I already tuned, like the people tuned out after that. But I want people to, in fact, I would probably lead, if I was going to show this whole segment, I might even lead with that part and say, wow, I was just totally confused by what you said. So it lets people know, like, some of this stuff in first is going to feel over your head. But if you think about these things, like when we're off the phone and you're like just going about your business, and then you're thinking about what the hell was he talking about with the valuation and the long term and diluting, and I don't get any of that. This is why I won't trade GME, because the people that are trading it don't get any of that. And they're the ones jacking up the price. And at some point, that's why they say it's going to end badly, because you said it. At some point, fundamentals matter. And at some point, a company's only worth what kind of revenue it's bringing in. So if GME on their quarterly earnings calls is showing a decline in revenue, but the stock price is going up and people are just buying more of it because they don't understand what's happening, that's not sustainable.
I've never even thought about that. I'm going to be honest. I actually never have. And it makes complete sense.
Yes. But I just got chills, because that's why I want to do this, is because this is what I want people to understand when they're trading these things. It's fun. Trading's fun. You can make a lot of money. People make a lot of money. But the more you understand what's happening, you're going to make better decisions over the long term. You're still going to lose money. You're still going to do stupid things because you can't, like I said, if you could just predict it, you would just go all in and you'd be done. But you can't, so you can just increase your probabilities, and your probabilities of making good trades increases when you understand things like company valuation, because ultimately, institutional money, real money that's going to move a stock, pension funds, hedge funds, whatever. There's like a laundry list. Just look up institutional players, the big money, the big foot. Those are the ones that create volume. That's where you see the big spikes in price. When that kind of money comes in, they are buying a company. They're investing. They're saying like, oh, wait, this company is making good money and they're going to make good money in the long term. That's why GME is not that kind of a company. BlackRock is not going to invest a
Right.
ton of money in GME unless they see things like, oh, this is going to be a good trade for us because this is dumb money. It's dumb money, not because people are dumb, but they're ignorant, and ignorant in the sense that they just don't know. You just don't know what you're doing because there's a learning curve.
I think it's more. So GameStop would be like the most crypto stock then. It would be the most like
Yes.
gamified, I think.
100% gamified. And I think there is a narrative building around GME of Roaring Kitty, Kid Hill coming back. I'm sure he's got deals arranged with GME. He's going to be the poster child for that company, and he's going to play off the gamification of it. And it's GameStop. I mean, come on. He's gaming GameStop. He's gaming GameStop. So it's like, it's got a fun narrative, which is why it's in the mainstream, which is why the stock is moving, which is why people are trading it. But at some point on this musical chairs where everybody's getting in and getting up and sitting down and music stops and the music starts and it halts and it unhalts, at some point the music will stop. And somebody's gonna get hurt. I hate saying it. I'm not trying to be a GME hater. I didn't trade SHIB at one point, or not SHIB, I don't know, one of those crypto ones that went Dogecoin. Actually, my uncle got into Dogecoin because it was cheaper than buying Bitcoin. So it's like, oh, I'll just buy the Dogecoin. Again, not really understanding what's going on, but just hearing like, oh, these are moving and it's cheap. Well, and then I'm thinking, oh, that's a sucker's bet. But I was wrong because I didn't take into account that if enough suckers want to play, then that will move a price. They will create kind of like an institutional size volume. That's what GME. That's what's so appealing about it, is it's like the retail trader stock. It's like these Reddit boards and these communities circled around this stock and became their own mock hedge fund in a sense.
That's crazy.
Right? It's interesting. I mean, it's a cool story. I don't want to have anything to do with it in terms of trading because I don't have the stomach for that kind of action, but it is interesting. So I'm going to have to go, George. But all right, dude, I love this. I hope that maybe that you and I could do this like once a week, and that's going to be part of like a segment of what I do.
Yeah, I mean, I'm down because this is more like a complete learning stream for me.
For sure.
I'm going to be honest.
One day we're going to get your video working, and then people will be like, oh, it's George.
Yeah, I'm going to do a face reveal.
Face reveal, exactly. The face reveal. I like it. All right, George. I love this. It was super fun. I hope that people got value out of watching this. All the things: comment, like, subscribe, follow me, follow George, and on to the next segment.
That was cool.
Yeah. All right, cool, George. Cool. Like I said, I'm going to send it through. We'll edit it. We'll see what comes out, what works, what doesn't work.
All right.
And then, I think this would be an amazing segment.
Me learning in a series too.
Yeah, because I hope you found it educational, and it's helpful for me because when I teach it, it shows how well I understand it.
Yeah, this is the most learning stream I've done so far.
Awesome.
I learn more than I talk. I'm going to be honest.
I appreciate that. Can you just say that one more time? Because that's going to be a good clip.
That I completely learned more than I talked.
Awesome. And I want you to, like, the talking is the learning. So you have the thing that I can't teach you, and the reason that you're on this call and not somebody else is you have to have interest. You have to want to do this. Well, who cares about a chart? Who cares? Like, you have to want to make money. You have to be interested in the stock market. You have to be interested in technical analysis to some degree, or you have to be interested in finding an edge. And maybe technical analysis isn't your edge, or you don't know what your edge is yet. But technical analysis is an edge for a lot of market participants. So it's a worthwhile thing to learn to do or understand.
Yeah, I think that's the people. I think that's the most looked after thing right now, especially with people starting into it, because I've seen millions of shorts on TradingView showing this support, showing this resistance, showing this pattern. That's been the thing I've seen the most by far.
Awesome, George. All right, let's tentatively say 3 o'clock on a Tuesday, and if you need to bump it to Thursday, we'll bump it to Thursday.
Okay. Yeah,
right.
because the reason I had to cover a shift on Tuesday. I'm normally off Tuesday, and I normally work today.
Yeah, I got it. No worries on that end. But I definitely now I got a hard stop. I went way longer. I thought we were gonna. I knew we would go longer, but I was like thinking 3 to 3:30. It's like almost.
Yeah, that's fine. That's fine.
Yeah. No, I gotta go.
Oh,
I appreciate talking to you, George. We'll talk again next week.
I appreciate it, Mark. Thanks, Mark.
All right, bye.
Bye.
Thank you for watching this episode of The Money Adjustment. If you want more, like, comment, and subscribe. You can follow me on X at Marc Kramer. Until the next episode, stay healthy and wealthy.